My guest today is Jeff Baxter with Guild Mortgage. In this podcast, he's going to walk us through several different steps on how to improve your credit score, how to be careful as far as not making sure that you get dinged too severely with your credit score, as well as when the right time it is to make your decision to purchase a home and what you need to do to be prepared. So please listen, enjoy, and I'm sure this is going to be very helpful for all of you first-time home buyers, and even if you are an experienced home buyer. Jeff is available to help you make purchases in Washington State, Arizona, and California. So if you're ready, let's get into it.
Jeff Baxter, Guild Mortgage. I've been a lender for coming up on 6 years now, I think. And I actually was also a real estate agent for 6 years with Windermere, which, if you're in the Northwest, is kind of one of the big, kind of like the Nordstrom. Windermere and Nordstrom all sort of started in the same part of Seattle, so very high-end, customer-focused, and that's kind of what Guild is like, which I like, Guild Mortgage. Very customer-focused, and for me and my business, that's really what I'm about. It's not about numbers. It's not about, just, okay, next. It's really getting to know the people, and I enjoy it. So what does that make me? 11, 12 years in real estate. So I really enjoy it. And a lot of times, it doesn't matter how excited you are to buy a house, or how much money you have, and even if it's a gift from grandparents and they're giving me all the money we need to buy a house, it's still 3 weeks into it, people start to realize, oh, this is stressful, I got a lot of decisions to make, and this is a big,
Yeah.
So it's kind of managing those personalities and helping people along the process, and so I really enjoy it.
I have to say that seeing you going from being a realtor, being in real estate, selling, and going over to the mortgage side, helping people purchase homes, you climb that ladder really fast on that mortgage side because it really does seem like you're very, very personable. I've seen some of your videos that you do. Maybe it's on a daily basis, but you're walking around, you're talking to us like we're your friend, we're family. So and like you said, that sounds like it's key because people are afraid. It's probably one of the largest investments that somebody's going to make in their lifetime.
It is. I mean, think of if you're lucky enough to have enough money to where you're buying $1 million home, great. But what if you're one of those people that's lucky enough to buy a $10 million business? That's the only time I could see where you might be experiencing something that's a lot more valuable than the home that you own. So for 99% of us, the home that we buy is the most expensive investment that we're ever going to make. And it's unfortunate, but I hear this so often, and I see videos that a lot of lenders make that are very successful, and I keep hearing comments from people, we used them, and even real estate agents, very successful, big, huge teams. It's like we used them, but we never got to talk to them. We thought we were getting that personality, but we never got to talk to them. And the person that we did talk to, I'd ask a question and they got mad because I thought we already went over that. And, it's kind of, and I left a voicemail and didn't hear from somebody for a week. And so for me, I completely understand. And I think that's the way I've always been. I'm a people person, I want you to go to bed at night, put your head on the pillow and go, okay, no problems, no worries, Jeff's got it, I'm good. People don't realize, they see things on the internet. I get people all the time will tell me, I don't want you to pull my credit. Well, why not? Well, it's going to affect my credit score, and I got to have the best credit score. Okay, but all of this work you've done for your credit score, isn't it so that you can buy a home? Yeah. Okay, well, if you call up a bunch of different lenders and say, hey, what's your rate today? And they give you a number, and they haven't pulled your credit, and they don't know anything about you, that number's no good. It's just a number that let's make it as low as possible, and they'll come be my client, and then later it's like, oh, yeah, I didn't realize your debt to income ratio is kind of high, and your score is kind of low, and so you're not going to get that rate we talked about, a month ago. So,
Jeff, I'm glad you're saying that because so many people that I hear too, they are afraid for you to pull their credit score, but then they're saying, "I'm ready to buy." Well,
yeah,
I need to do this. So,
yeah,
can you kind of walk us through this step
yeah,
of the pre-qualifying and
yeah,
qualifying and things like that? Because I
yep,
think some people think, "Oh, I make 50,000 or I make 100,000, I could afford to buy that." Well, no, it's
right.
not like that. So,
No,
how do they go about it?
so the thing about so there's a couple different things. So what we've recently developed is the ability to do what's called a soft pull, meaning I could do a soft pull. It doesn't affect your credit score, but it'll still give me your credit numbers, your credit scores, and your liabilities. Any credit. So, for instance, I don't care if you have a doggy daycare that you have to pay $500 a month to. We don't care about that. We don't care that you have a landscaper that you pay $300 a month to. We only care about debts that are credit. Any time where you had credit cards, cars, things like that. But really, forget about the soft pull. I want to do a hard pull because a soft pull only pulls from basically Freddie Mac. So I'm going to try to keep this answer as quick as possible, but so that people understand, there are two governing bodies that oversee all conventional loans, Fannie Mae and Freddie Mac. Used to be private, then 2008 happened and blew everything up, and the government kind of took them over. So now the government controls those two bodies, and they're the ones that have all the rules and the guidelines, what you can do and what you can't do. So if I do a soft pull, I'm only pulling from Freddie Mac, and that's okay, but sometimes you're not going to get approved because Freddie Mac might be more strict in certain things. So if I do a hard pull, I'm actually pulling from both Freddie Mac and Fannie Mae. Fannie Mae is a little bit more loose in some of their rules, and 9 times out of 10, if somebody is recent into this country, maybe they've only been here a couple of years, Fannie Mae will approve them where Freddie Mac may not. So, but the other thing is, when people get their credit pulled, I will tell you this. If you're going to buy a car, do not let them pull your credit. You go to your bank and you sit down and you talk to your bank and you find out the best deal that you're qualified for, and you get a letter or whatever, and you use your bank. You go in to buy a car. A lot of times what the car dealers will do is they will pull your credit from different banks multiple times. So you go in to buy a car at ABC Honda, they pull your credit 6 times, and then you go, well, I don't really like that car after all. You go to ABC Toyota, and they pull your credit 6 times, or you go to a used car dealership, and they pull your credit 12 times because they're really trying to find you a deal. Now all of a sudden your credit just went down 75 points, and you go, what happened? Why is my credit so bad?
Oh, okay. Hold on right there because now that explains to me. You see these car deals and they say, we work with all lenders. We will find you a loan. So that is what happens.
Yes.
Okay.
They are pulling it multiple times, and what you'll see on your credit report, why did it drop 100 points? It'll say too many pulls. Too many recent pulls. So the thing, though, that's different about mortgage, and this is why I get so frustrated when people try to tell me how to do my job. I don't want you to pull my credit, and I don't want you to do this. Okay, I'm happy to do, but in order for me to help you, let me explain to you what you're tying my hands behind my back. And if I pull your credit as a lender, and let's say you have 3 or 4 lenders that you're looking at, and you have them all pull your credit within 15 days, if I pull it the first time, it might go down 4 or 5 points. But then that's it. Anytime a lender within that 15 days pulls your credit, doesn't impact it because the credit bureaus know you're not going to buy multiple houses, right? Whereas if you get your credit pulled for a car 10 times and then you go to Best Buy and you want to buy some appliances, then you go to the furniture store and you want to get furniture, the bureaus are like, this person's on a credit spree, they're going to end up upside down. So we don't think that they're a great client, a great credit customer.
Okay, that explains a lot. I mean, right up front, because again, like at the very beginning, we're talking about people's fear of having credit pulled. So, and that also makes it's great information that within that 15-day, the 2-week period, where if you're going to a realtor or a lending place and one pulls it, you could go to another one, they could pull it, and it's not going to really affect it. Like I said, it'll knock it down maybe 3-4 points or so. and that's it.
Well,
Um, Now that we're on that points thing, I used to hear 720, 740 credit score. Is that, you know, is that where they want to be at, if possible, for an FHA type of loan, or a
well,
conventional, or
yeah.
I'm a new guy. I don't understand this stuff.
Well, you know, it's funny. I very seldom, in the years that I've been doing lending, very seldom do I see 800 credit scores. Very seldom do I see credit scores even over 740. So really, I think the average is probably 680. But I will tell you, the thing to strive for is to, if you can just break that 700 mark, that really seems, and 720 is better. And the way credit scores work as far as interest rates, usually it's every 20 points you get a little bit better break on your interest rate.
I wanted to interject something in here for right now as far as mortgage rates and credit scores go. As of lately, the Federal Housing Finance Agency has updated the loan fee structure of mortgages and lending institutions for borrowers who have excellent credit. Now, what is happening apparently is if you have excellent credit, your fees or your interest rate, your mortgage rate is going to be higher. So it will subsidize those who have lower credit scores. But please check with your mortgage lender. Things can always change.
So if you've got a 680, it's like, oh gosh, you know, that's, you're going to get a high interest rate. But then you break that 700 and all of a sudden it's much better. 720 is better still, and 740 and 760. And then 780, that's about the highest, really. I don't think there's no better interest rate you can achieve for being over 780. So if, and to be, you know, it's kind of funny, the people that tell me not to pull their credit, you know, eventually when we work things out, it's like, you've got a 620. I understand we need to do more work, right? You can still buy a home at 620, but you may be paying, more money to get an interest rate, and if you're doing less than a 20% down payment, you're going to have to pay more money for mortgage insurance. So I will actually work with people. You know, you get new buyers that come in, and they'll sit down, and I just saw them pull in a, $50,000 Jeep, and they're living in an apartment. So we'll talk about that, and we'll do things that, what can we do to improve your score? And the one thing that to me is kind of funny, I've not heard of any other lenders that can do this, but I can quite literally, if you come in with a 620 credit score, and I can do what's called there's a wizard that we have the ability to look and go, okay, they've got a 620 credit score. What can we do, Mr. Wizard, to get this person's score higher? And sometimes it'll be, okay, how high do you want to go? And I'll say, well, let's say I want to go to 700. It might say, there's no way for this person to reach 700. Okay, what's the highest that we can get them to? It'll tell me, okay, Bank of America, pay it down $500 to this dollar amount. And then this other credit card, you went and bought tires from Les Schwab, and you took out a credit card from them. It was $500 credit limit, and you bought $400 in tires. Now you're 90% usage on that one credit card. Pay it down by $200 or $300. Those little things, and then if you do those things that I ask you to do, call up those companies, call up those credit cards, pay them down, give me a receipt. I take those receipts, I turn them into our credit company that we work with, and usually within a week, if I'm going to bump your score, it can be done within a week. So instead of waiting 30 or 60 days or 90 days, I can do it within a week. And now, if you bought a home and, oh my gosh, your credit score is awful, let's get your credit score up. I look at the wizard says, yeah, we can do it. Great. Then we're good to go. And within a week now, all of a sudden, they've got their score up 60, 80 points, and the rate's much less, and the cost to get that rate is much less. So that's kind of, when people say, oh, I don't want you to do this, it's like, you don't understand. I'm the only one you're going to talk to probably that's going to be able to take your score and get it from what it is to much higher. So let me do my job.
Yeah. This might sound, I'm going to say, I don't mean to put you on the spot. Sorry for
Okay.
asking this, and don't worry if there's no right answer
Right.
or what. But
Yeah.
I've seen these commercials as of recent that say,
Okay.
"Hey, I downloaded this app and it raised my credit score by 70 points in
Yeah.
15 minutes."
Yeah.
What
It's
is
funny.
that?
My answer to that would be, so what? Because the whole thing about, if you actually have a plan, the one thing people don't understand, if you have a plan and you don't, people are like, oh yeah, I buy everything on credit because I want my credit to be good, so I fill up my credit cards every month and then I pay them off at the end of the month, so there's zero balance. Well, that's not true, because if your payment is due on the 28th, that's not the day, and you pay it off before the 28th, like say you pay it the 27th, you pay that off, it's still going to show a balance, because there was a date like maybe a week earlier that was the cutoff date for that card to be paid off so that it doesn't report to the credit bureau. So I get people all the time, I say, well, how much do you have in credit? Oh, I pay it off at the end of every month. I pull the report and it says you owe $500 a month to this credit card company and $600 a month to this credit card company and $1,200 a month to this credit card. No, I pay those off. Yeah, but not before they report it to the bureaus. So that impacts your debt to income ratio. So, those are the things really that you be, because credit scores, if you monitor it, they change daily.
Yeah.
Oh, this got paid off, that got paid. Oh, wait a minute, I went and bought all this stuff at Nordstrom, and so that went up. But keep your utilization to a low number.
Wow. So, Jeff, if I was the first-time home buyer, and with the interest rates, well, being high, and now they're talking about, oh, they're going to pivot and they're going to lower it. Oh, no, they're going to keep raising it.
Yeah.
What do I do as a home buyer today if I want to, and if I'm thinking about buying a home within the next 60 days? Is it good for me to go to somebody like you at Guild and lock in rates? If I'm locked in with today's rates, does that mean if it goes down, I don't get the lower rate?
So that's a great question. And here's the thing that I will say. Everybody that can buy a home needs to buy a home, and here's why. Because there is a 10-year cycle, right? Where, and Windermere actually has a chief economist, and Guild Mortgage has gosh, I don't remember his title right now, but basically he's in charge of what's happening in the markets. And what they say is there's like a 10-year cycle. And it doesn't matter if you buy when the prices are high, and like let's say you bought last summer and, oh my gosh, I paid a lot of money for this house, and all of a sudden it's lost some value. It doesn't matter, because in this, especially in the Puget Sound, it's gonna, maybe the price of the homes come down, but then within 3 years it's going to be way over what you paid, and within 10 years it's going to be much higher. So it doesn't matter where in that cycle you buy, as long as you hang on to that home for 10 years, it's going to be great. But the other thing, and this, as a homeowner, you get a tax write-off. Ultimately, what that means is you might save $5,000, $6,000, $7,000 a month on your taxes that you're not paying. So let's say you're paying $3,000 a month or $2,500 a month for rent, and people come and say, okay, we're paying $2,500 per month for rent, so we want to keep our mortgage payment at $2,500. I say you need to talk to an accountant, because you might be able to afford $3,000, and then you're going to save $500 or more dollars a month, because you're going to walk in, as soon as you buy that home, you're going to walk into your HR and say, hey, listen, I want my withholding, I want to lower how much you're taking out of each check, because I'm not going to be owing as many taxes, because I'm going to be able to write off a lot of stuff. And so you'll see those savings. My daughter and her husband just saved thousands of dollars. Wow. They just bought a home last year, and at the end of the year went to the accountant and said, oh, look, you're getting thousands of dollars back, because they didn't reduce their withholding, and so they overpaid. And it's like, yeah, that's kind of how that works. So you need to invest regardless of what the rates are doing.
Okay.
Because the rates are most likely going to come down. If you buy now, when the rates are high, there's less competition.
Mm-hmm.
So when the rates are high, there's less competition, prices of homes come down. You can also, as the buyer, say, okay, I want you to pay some of my closing costs. Maybe I'm going to write an offer slightly lower. And all of these little options that you have, you kind of have your pick. You're the belle of the ball. And then as as rates come down, prices start to come up because there's a lot more competition now. There's people, bidding wars and things like that. So you don't want to be in that scenario. So it's actually kind of good to buy now. If rates come down in 6 months, we'll just refinance you. You'll save hundreds of dollars a month, hopefully, and it won't matter. You got the home of your dreams for the price you wanted, and you can't believe you got it. And now you can refinance it later, and you're happy, and I'm your best friend.
Yeah. So a couple of quick questions about that, though.
Yeah.
Is it wise to lock in a rate if you're looking now rather than waiting until later, or it doesn't matter? And then
Yeah.
the second question of that would be, should I consider an ARM and gamble as
Yeah.
long as the ARM says it doesn't go above 7.5, but it can drop 2 down to 5? And
Right. Yeah. Yeah, no, those are good questions. It's funny. So you and I grew up in an era where ARMs were really big. Even 10, 15 years ago, ARMs were really big because, oh my gosh, I saved 2% on my interest rate. Instead of 9, it's 7. Oh, that's great. And then I'll just refinance it in 5 years. Well, the thing about ARMs is because it has really happened more since COVID, the markets, which are the mortgage-backed securities, those are bond markets, and those bonds typically, it's just like the stock market. You have all different types of investors, and what are they buying, and how much are they buying? And ARMs have not, since COVID, ARMs have not really been cost productive, because I could get an ARM and maybe save you 1/8% on the interest rate, and so that saves you maybe $40 a month or $30 a month in your mortgage payment. But then there's that fear, and I know because I had an ARM once, there's that fear like, oh gosh, what if the rates just keep going up? When should I refinance? What's going to happen? And you don't know. So ARMs don't seem to be, unless you can get a private bank, there are some private banks that are gambling on ARMs, and if you can find those banks, but they're hard to come by, then you might be able to get a good deal on an ARM, but still, I kind of prefer that people buy and get a fixed mortgage if you can. Because if you say, okay, let's say the interest rate's 7%, I can afford that for now. I can, and this is going to be fine. And if I lose my job in 5 years and I wasn't able to refinance, well, shoot, 5 years, maybe I've gained $150,000, $200,000, $300,000 in equity on the home. So I'll take my money and run, But I think it's still really good to try to get a fixed rate, something is not going to go up. What was your first question? I'm sorry, Chuck.
Is it better to lock in your rate now? If I'm going to buy a house,
yeah.
I know that I'm going to buy a house within 60 days. Do I wait 60
Right.
days, or do I just say,
Yeah.
you know what, Mr. Mortgage Man, let's
Right.
lock this rate in?
Yeah. Well, that's a great question. So typically, you don't get to lock in your rate until you have a contract in hand, mutual acceptance on an offer. Here it is. I want to lock in my rate now. Now, there are some programs, and we have some programs where you can, we call it lock and shop. It's a great program. If we know rates are going up, and you can't always know, right? You can only predict. The trend looks like it's going up. So if I know that I'm going to be buying a home and in 90 days, maybe if I can do a 90-day lock or a 60-day lock, the only problem is you have to pay money. Because the lender is reserving those funds for you, and if you after 60 days don't buy a home, then they're not going to take that loss. So that's why you pay that $500. And if after 60 days you don't buy a home, that $500 is non-refundable. And then you lock in again, and sometimes those rates are not as great. So it just seems to be a lot of expense to try to lock in without really knowing. I always tell people, we're going to keep an eye on it. We're going to get you the best rate possible, especially right now. The saying that it's kind of come out is date the rate, but marry the house. That
Gotcha.
means that rate is not my forever rate. right? If I buy a house today and I locked in at 7%, gosh darn it, he's got my number and he's gonna keep an eye on my mortgage, and he's gonna say, oh, it's been 9 months, rates are down a point or whatever. We gotta, let's do our refinance and lock that in and get you down to 6%. So, let's marry the house, but let's just date that rate for now.
Okay, so for me, then it is, I from listening to you and understanding this, then it is vital that I am pre-qualified.
Yes.
So I know. So
Yep.
don't mess around. Go out and get pre-qualified.
Yep. Yeah. No, that's a great statement. I don't know if you saw my videos where I talk about, if you think you're going to be looking for a house in 60 to 90 days, don't wait for 60 to 90 days to get pre-approved, right? So and we say pre-approval, pre-qualification. There's really only two things I care about. To get you pre-approved, really all I got to do is pull your credit and look at certain things and go, yeah, okay. Based on what I see for your income, based on your expenses, based on all these different things, you can afford this home. I'll write you a pre-approval letter. Pre-qualified means, we may have gotten some information from you, like your pay stubs and things like that. But I really want to take you to the next level, which is called pre-underwritten. Pre-underwritten, and that's really what sellers and listing agents want to see on an offer, is that not only have I looked at your credit score, I've looked at your income, but I've given it to an underwriter who works for my company. Our underwriters are located in Bellevue, and they look at your paperwork, they look at your income, they verify your income, they verify all of these documents, and then they'll send you a letter and me a letter that says, we have approved your credit. So literally the only thing that we need from you from now on is, if you buy a home, we need to get title to make sure everything's okay with that house and there's no encumbrances or anything that can mess up your ownership of that home. And we need to get an appraisal done to make sure that you're buying it at the right value. And that's it. There is no, because the biggest question is like, well, what if? Was there a spot on his record that prevents him? Oh, there was a bankruptcy that nobody knew about, but it was something else, and then he had a slightly different name. That, who knows? Those are the fears that listing agents have and that sellers have. Is like, they're not credit approved and they haven't been pre-underwritten. We're just really hoping that this thing closes on time. It's a big fear.
Well, I'm glad you're saying that and clarifying. And pre-approved and pre-underwritten, you said,
Yep.
is the
Yep.
term. So
Yep.
because the way, again, that I'm understanding and looking at this is, just because of the market the way it is right now, with interest rates being higher, and we're saying, oh, there's fewer houses out there, so
Yeah.
there's less competition. No, don't think that way. There's possibly
Right.
more competition because there's less availability, so you need to be ready to buy.
Ready. Yep. Because this always happens. I mean, this happened to me when I was a real estate agent. This happens to me now as a lender. I get so many calls when we're just looking, we're just wanted to talk to you. We're probably looking later this summer, or this or that or the other thing. So we just wanted to get approved, but no rush, because we're, like I said, it's going to be later. And then they just happen to see an open house. And then the wife says, if you don't get me this house, I'm divorcing you. And it just became like, oh, okay, well, can we, it's 8 o'clock on a Saturday night, and they're reviewing all offers tomorrow morning at 10. And my agent wants to know if we can waive our financing, and can we? It's like, I don't know. Had we gotten you pre-underwritten, I would have said yes, or you can do those things. But hang on a second, I got our friend is calling. I just have to. So I don't know. You had we gotten you pre-underwritten, I could have laid it all out for you, but I don't, and I can't. So we can do the best we can and try to see if I can get you at least pre-approved, and write that offer. But no, I don't ask me if you can waive finance contingency. The answer is yes, if you don't mind losing your earnest money.
Yeah.
So.
This is really, really great information. And Jeff, I want to ask you, so for people in the Pacific North, or not Pacific Northwest, but the Washington State, Seattle
Yep.
area, how would they reach out and find you
Okay.
for your assistance on this?
That is a great question, Chuck. And what I will tell you is this. Not only can I help folks in the state of Washington, I'm also licensed in the state of Arizona, and I'm also licensed in the state of California. So you have friends or family in any of those three states, the whole state, not just, cities, but the whole state. Any friends, or you're thinking about moving to those areas, best thing that you can do is you can either call me, 425-328-9085. The other thing is Jeff Baxter, Guild Mortgage. You type that into any search bar and it will pull up my information, and you will see what I'm very proud of is all of my 5-star reviews.
This has been fantastic, and I really appreciate all the information you've given us today. And I just want to reiterate to everybody that's listening or watching, if you're in Washington State, California, or Arizona, you can reach out to Jeff Baxter. You could Google him at Jeff Baxter Guild Mortgage, and you'll find all of his information and all of his 5-star ratings.
Right,
And
right.
I will have his information in the notes,
Thank
and
you.
we'll make sure that people can
Well,
reach out to you.
you know what I did to make it easy is I just tell my clients, just go to applywithjeffbaxter.com. Takes you to my site, and so my information and the apply button is there. Apply. I love Jeff Baxter. Jeff Baxter was a guitar player for Yes. He was a guitar player for Steely Dan. Jeff Skunk Baxter was his name. So if you have if that helps you remember, applywithjeffbaxter.com.
There it is. You heard it. Well, Jeff, thanks again. Enjoy the rest of your day, and it's time to go out and shop for our new house.
Right. Thanks, Chuck. It was great.